our next presenter. Martin Morris is the head of Centric, and will talk to us about high net worth clients and their unique requirements. Martin, welcome.
Thanks, David. This is going to be quite interesting to navigate because I can't see the screen. My glasses aren't very good for this, and I'm getting old, so it's going to be an interesting. We'll work this out. So, and I can see my time as well. I ran over time. I can see that. Yeah, I see that down there. So I'll be good. I'll be good this time. Thank you. Morning, everybody, and thanks very much. Interestingly, just to close off on Mark's presentation. If you haven't heard the word digital first business, there's a lot of study on it. McKinsey talk a lot about it. And a digital first business is the concept of there's always going to be a digital outcome. In today's environment, you can't miss it. But actually, one of the tenets of it, it says the customer still always comes first. So that concept of using AI, and Mark said this on Monday, and I was waiting for him to say it again, or Tuesday when we presented, and I was waiting for him to say it again. And he said the biggest business risk is not linking your activities to your business strategy and your value proposition. If we remove the fear of digital and remove the fear of AI, and we go back to what we all got into business for, which was to service clients, it's a lot easier to decide what to do. And that's really what this presentation is about, is looking at the customer and understanding. And we just tried to do a reflection on what we're doing at Centric and how we consider our customer. And we've put it in the terms of being, in terms of MDA, high net worth accounts, and trying to navigate managed accounts with that high net worth investor and some of the challenges you face. And we just wanted to put in place some of the ideas that we've done inside Centric. So hopefully that'll give you an idea. Now, I'm not a portfolio manager, and I'm also not an advisor. So there's going to be some things on here. If you're a portfolio manager, you'll go, yeah, okay. And if you're an advisor, you'll say, yeah, they're okay. They're not designed to insult anybody or patronize anybody. What they are designed to do is just give you a framework of consideration to see how we've done it. So, and I'll just introduce on the table over here, we've got Kieran Canavan, who is actually our CEO. Do you want to stand up, Kieran? Just because when you want to ask some really technical, professor-led questions, Kieran's the one who will answer those questions for you. And we've got Kit Ramsey, who heads up our product division as well, so and marketing. So we'll all be around for the morning and the break, so if you've got any question. But as I said, if they're too technical, I'll refer to the mad scientist, Kieran. So I just want to give you a little bit of a placement. Who is Centric? We are a principal sponsor, but again, it's like when I joined Premium years ago. It was a name that people knew and no one knew what we did. I think that's quite similar here. I'll take you then through the portfolio management considerations that we do on the investment side. What you might want to think about are some of the ideas or some of the things that at a high net worth investor level you might want to be considering. It isn't the total number. We haven't got time to do all that today, but there's some of the things that you should be think tanking about. And then looking at how we've handled it inside our business is just some of the ideas you might want to think about. So who are Centric? Centric is one of the country's largest MDA operators. We're part of the Findex family. Findex has $17 billion under management. They have about 250,000 clients. They are the 6th largest accounting network in Australia, and they have the prime position of being one of the largest independently owned accounting and wealth practice businesses in Australia and New Zealand. Huge wealth of experience, a very vast level of clients because they do audit, they do tax, they do business science, they do financial advice. And through all of that, they bought Centric. Centric was running an MDA program, and then since that time, Findex, through Centric, has transitioned to be a predominantly MDA managed account operation. And I just want to talk to you through how we've navigated that on the Centric side and how Centric fit in and how we've assisted. And what we've done is you've effectively got this wealth and accounting division, and then sitting off to the side now, we've got Centric. And under Centric, we have a platform business, and I'll talk to you a very small part about the platform and some of the things that we've done. It's not a platform sale, so I'm not going to be going too much on that, and I think Recep did a great job. Mark alluded to some of the changes we've got to be thinking about in an AI in terms of how you bring your technologies together. But what we do also on the Centric side is we have a very sophisticated investment solution designed to answer some of those scalable questions. How we can answer some of those questions around how do we deliver portfolios at scale that aren't just using managed accounts to get business efficiency, but can add real value to the clients. And I've been in the industry, 35 years. I joined as a trainee in 1990 in London. I've predominantly worked in platform-style environments, but I've been on the licensee side. I've run my own financial planning firm in the UK. I've run my own consultancy firm here. I've been on the licensee management side. So I've got an insight across a lot of different parts of the industry. And when I joined Praemium in 2016 was when I really embraced the managed account sector. And I had a light bulb moment, and that was, this is how you bring business efficiency and client value proposition together in the most perfect moment. But the businesses that are most successful in delivering managed account strategies are the ones that actually understood their client, they understood their investment philosophy, and those two things together allowed them to come up with the best opportunity of transitioning their clients onto managed accounts because it made sense. It wasn't just a client cost saving. It wasn't just a business efficiency grab. It was looking at your clients and saying, what type of client am I trying to service today? What client am I trying to service tomorrow? What we also have is businesses that can specialise, but you have businesses that actually have quite a wide, vast, quite a big segment of clients that you've got to service. And how do you do that? And some of the thought process here is we've got a growth in the high net worth market, and we've got an opportunity to service high net worth investors that are coming to platforms for the first time. And I just want to take you through some of those. So if you think about, just first of all, how do we think? How do we think about portfolio management? And this is the framework that we use. So I won't go through it in too much detail, but everything we do is based around this portfolio management and construction consideration. So we have an investment philosophy program. How we then implement that to different client segments, it can change, whether we're doing it en masse in an MDA and having it completely outsourced, or whether we're doing a blend of MDA and bespoke, or whether or not we're doing an IMA. Whatever we're doing is we're looking at this framework, which is the strategic asset allocation work. We're then looking at, okay, what is that strategy? What is it we're trying to achieve? We're looking at the tactical side, and then we're looking at the implementation side. That is the tenet every time we consider a client scenario, when we consider our portfolio construction, when we're considering what investments that we're looking for. They've got to fit into this framework. And this is our anchor. This holds us together whenever we're moving forward. And when you think about what we need to do from an implementation point of view, is you've got this strategic asset allocation, tactical asset allocation, and the range of investments that we've got to consider. And what we've got to really look at is what are the requirements and considerations? And this is where it becomes really, really important when you're thinking about the managed accounts, when you're thinking about your clients and what you're trying to implement. And that is, we need to consider at all times timely implementation. So if I'm considering investments and I'm considering my clients, I've really got to understand how do I implement this? How do I do it at speed? How do I do it with digital capability? But how do I answer that client scenario? Is it cost effective? And just bear in mind, this presentation is based around the high net worth space. And one of the things about the high net worth space, as we'll talk about in a moment, is the type of assets they want access to. You can't, if you're thinking about that high net worth space, you can't think about it in purely just a retail managed account scenario. You're going to have to think about stepping outside of that world into some alternate assets, private equity, some less liquid stocks. So you've really got to start to think about it. And Richard was talking about platforms earlier on, where he was talking about some specialising in certain areas. So that might mean that if you do have that and you have low-cost platforms, the whole idea of consolidating platforms and having less platforms, is that changing? Does that mean we're talking about intergenerational wealth being this massive opportunity. If you're dealing with older clients and platforms are now starting to specialize, does that mean you're going to have more platforms? How do you implement the same investment philosophy, the same managed account on different platforms, at different price structures? How do you get family pricing and scalability? How do you bring the families together? It's a really important factor that what I talk about a lot in my teams and to people is the cane toad theory. And the cane toad theory is don't do something that's going to cause you problems tomorrow because you haven't thought where you want to end up. What is it you're trying to achieve? So when we're thinking and what we're doing all the time is we're trying to think ahead. What is that? How are we going to implement? What is it we're trying to implement? How do we keep it cost effective? And then what are we going to require from a portfolio reporting point of view? What are we going to require? It's just an example, but what does the client engagement look like? You've also got platforms that are designed, and again, I'll go back to Rechep's presentation, around this desire for non-custodial reporting. There are a few platforms that have got non-custodial reporting. There is not a perfect solution for delivering high net worth reporting through a retail platform environment. There just isn't. And I'd argue in Australia at the moment, we haven't nailed API and we haven't nailed connectivity. We've got this massive opportunity digitally, and platforms in Australia still struggle with being able to plug something in and being able to report data in both directions. You've still got problems with Xplan, transferring data, and the version of API or EPI, whatever it is, the data transfer that we're doing. There's problems, and there's data problems all the time. And that needs to change in ONC, and I hope that's what AI is going to change, is the speed in which data can flow in different directions. And data's data, and it's gold, but when it's born, it should flow. It should flow in all directions, and it shouldn't be so restrictive as it is. But it is currently. So you've got to think about what is that portfolio reporting? What do my clients want? The type of reporting you give to a mum and dad pension superannuation client compared to a high net worth investor is different. You've got to really consider what it is they want from you, because your value proposition is delivered in everything you do, in everything they can see and feel. Your value proposition is not delivered by your advice that takes place in your office with your paraplanners or your technical people or estate plan. It's delivered when you're engaging with them, and that's with AI, that's with the right type of avatar, the right type of thinking about communication tools, and the right type of delivery. And the high net worth space is very different. And they want very different things. And we've got a particular family office that we've set up recently, and poor old Kieran and his team are bombarded trying to understand this family office and get into a rhythm with them, but they're constantly asking for information. They constantly want reports, they want to know what's going on, and they do things very, very differently. So what does that mean? What am I getting involved in, and how do I step into this space if that's where you want to step in? But trust me, it is the space you want to step in, because high net worths are increasing. The number of family offices is increasing. We're seeing significant growth in this sector. We're seeing young people become very rich through tech very quickly, and they need a particular type of advisor. They're not looking for superannuation planning. They're in a growth mode. So it's what is it that they want? And we'll talk a little bit about a couple of those things. So what you've then got to think about is, will I be able to service the clients I'm servicing just from an SMA? The efficiency of SMA, they're amazing, but they really only deal with liquid assets. The biggest thing that SMAs are struggling, SMA technology struggles with at the moment, is the ability to deal with illiquid assets. But the higher net worth of client you've got, the larger their portfolio is, the more likely it is they're going to want something bespoke. They're going to want something more liquid. They're going to want private equity. They're going to want alternate assets, and I'll talk a little bit about that at the moment. But then you've got to look at, is the MDA the right solution for my clients? Or for this pool of clients? Do I have SMA for my retail clients and have MDA for my more complex clients, but I can still do it in a retail way? Or are you having to look at IMA because you're dealing with those family offices and you need something more wholesale? What's the technology base? How does it fit into your investment philosophy, your investment process? How does it stay scalable? How does it stay cost effective? And how do you deliver your value proposition through the right technology? And that's the sort of thought process all the time when you're going through. These platforms that are coming, I'll tell you right now, platforms in Australia have not reduced their price quick enough. You still pay the same amount of money for a digital client who does everything online as you do for someone who fills in a piece of paper. We haven't got there yet. We should be seeing great scale restrictions. We're not really seeing them yet. But we can deliver the efficiency, and we can push our providers into be thinking more about what we're doing. At the moment, it's a little bit about they're finding outside packages and sort of trying to glue them on. But we will see it. It won't take long. As Mark was saying, the difference between AI and how it's come from 2 years ago to now, it won't be long before a provider comes in and switches on the magic button and does not have the legacy of old school. And let's face it, some of the challenger platforms are now legacy. They have legacy systems. And it will keep changing. We will see change. But I reckon the world's going to change as you see groups come in and really look to challenge this AI space and what we're going to be able to do. So when you think about the high net worth investor considerations, this is a really important factor, right? If you're looking at this high net worth space, and these are some of the types of things to be considering. Doesn't matter where you look around the globe, IPOs are dropping off because private equity firms are getting in and they're paying the money that needs to be paid up front. IPOs are not as needed nowadays to get the cash. There's lots of angel investing. There's lots of people want to invest in these companies. They don't need to go and list on the exchange and have all that legality, all that reporting, all those constraints. So they're not. And you're seeing significant reduction in this in IPOs. But what you're then seeing, obviously, is an increase in the requirement for how do I get into private equity then? How, as an investor, if I'm not an angel investor, how do I get into private equity? Where's the alternate asset space for me? And we keep talking, you see, it doesn't matter if you go to private wealth markets conferences or you go to some of these private wealth conferences, they're all talking about alternate assets. We're talking about AI a lot. As Mark was saying, you go there, it's another alternate asset conference because that's what they're talking about. And if the high net worth sector and you're thinking in your business that this might be somewhere where you want to head or you're headed at the moment, that alternate asset space is key. The point is, I keep going back to my slide. When you get the slides, keep that slide. What is our construction of how we build portfolios? How do we access some of those considerations? What you've also got to look at is this, which is this validator. We did research, again, in a past life. I don't mind talking about other competitors because all the research we do make our industry better. Investment Trends did, again, I've got things through my career that just make me go, wow. And this was a wow moment for me because it's all about client engagement. And if you're not thinking about your client engagement, you're just running a shell of a business. And that's this validator. And if you don't know what a validator is, I'm sure it makes sense what a delegator is, and I'm sure it makes sense what a self-directed investor is. A validator is a person who believes they're coming for a partnership discussion. Doesn't matter what you do, doesn't matter what they do in the relationship. They do not want to outsource to you. And they don't know they can't do it all themselves, but they're not ready to let go. And I think what you're seeing here, if you have a look at the chart on is that your left? Your left, is 2023, which was published results. I didn't have the published results because I haven't bought the research, but I did phone the CEO of Investment Trends and asked him what the current results were. And what's amazing on here is delegators have gone down to 5% of high net worth people. They've got access to AI, they've got access to technology. They don't need to delegate as much as they used to. So only 5% of high net worth people see themselves as a true delegator. If your website says, come to me and give me and I'll do everything for you, you're not talking their language. If the way you're using digital engagement isn't talking to them, you're not talking their language. 58% are now validators. Look at the change from 2018. It's significant. And it's increasing. And it's because they're getting access to information. So if you're not giving them access to information, as Mark was saying, someone's going to give it to them. And they're going to fill the void that you're not filling. But if you can use AI and you can use technology and you can think about the investment space and how you blend all that together, you're going to have a really great opportunity with this validator type of investor. And when you're thinking about servicing them, you've got to think about these types of things, right? So holistic wealth service. High net worth investors don't actually want you to do portfolio management as their number one, right? They've got their portfolio, they've made their assets, they're clever people, often, some aren't, but most are. And they've made their money. So what they want is estate planning. They want intergenerational wealth transfer, and you'll hear some really good information from beta shares wherever they are in the room. I can't see because I've taken my glasses off. That was actually good on Tuesday because it was a precursor to my presentation, talking about all the different types of demographics. If you're dealing with high net worth and you're talking and you're looking at family units, there's an opportunity to do intergenerational wealth planning. But that's what the parents want. The children don't want it necessarily, unless they're a bit older. So you got to think about, how do I bring this whole family unit together? But it is understanding this, and I would say that if you haven't got the investment trends, high net worth research, I'd argue find someone who's going to give it to you. Go to one of the providers that's got it. Because it will tell you all this stuff, right? So evolving use of platform technology. Before, platforms were just for retail clients. High net worth private wealth firms didn't use platforms as much. They were just for custodial. They wanted to do really bespoke things. You're now seeing that change. You're seeing platforms trying to break into this space. You're seeing, or not trying to, are breaking in this space. They're expanding their investment options. They're expanding their technology. And on the advisor-led investment governance is all about the outsourcing, right? So that's that validator concept. That's that family office sort of aspect. But you do have the rise of the family office and the virtual family office. You've got established family offices with significant amount of money that can probably create their own infrastructure. Who's doing the bit for the groups that actually don't? Now, you've got to have different segments, and some people are quite happy to go to JB Weir's, or they'll go to the Coders and the Crestones. That's great. But there's not that many well-known brands in Australia. So there's an opportunity. If you've got this growth in a market, you do have an opportunity to be tapping into this space and saying, what does that virtual office look like? And the virtual family office is just high net worth investors with significant amounts of money, say around the, you might, as doesn't matter what the rate is, $5-10 million. But actually, how do you tap into this? How do you use managed accounts to get into this space? How do you do it in a way that communicates to them what they want to hear? How do you use MDA? How do you use SMA? How do you IMA? What is it that your technology is doing? But service in this sector is really specific. So what have we done to look at this? And these just answer some of the solutions. So think about Centric from our investment aspect first, is when you think about what we're doing, we have a CIO service, right? So the CIO service is offering IMA solutions. It's tailoring into our MDA where possible to get scale efficiency. But those CIO services are outsourced. Investment committee, come to us for advice. We'll run the portfolio for you. But there's no advice. We are doing the strategy component first. There's no advisor at this point per se. There does when it comes to implementation. But what we're doing at first is we're offering those CIO services. This is going quicker on here than it doesn't matter. What we've also done at Centric is, through Kieran's team, is we've actually realised that if we're trying to create scale and we're trying to create opportunity for high net worth investors, offering them standard managed funds is not going to cut it. So Kieran and his team have created an environment where they have an RE capability, Now, that's not going to work for everybody, like small business, I get that, but it's how we've done it. And what we've done through that is that allows us to look at investments that aren't widely available, that are attractive at a scale level at a MDA, so a complete outsourced level, so that we can offer a retail client an MDA solution, but access to really bespoke or offshore investments where we can be an RE, we can source offshore, we can source alternate illiquid assets, and we can put a wrapper around it where we can manage it. We considered the implementation point of view. We've looked at time. We've looked at cost. And we control that decision-making process because we've defined a business model that allows us to do it. And that allows us to have relationships. Like at the moment, we've got a relationship with Tiger Global that we will be the Australian face, and that will give access to a very sophisticated offshore investment opportunity that is not readily available on platforms in Australia. We can offer that as part of our solution, and then we've got to find ways in which we can blend that into a portfolio. Doesn't necessarily always fit nicely into an MDA or a client's portfolio if you're having to individually invest, because it's wholesale only, but we can do it through the MDA. So we found our solution by using that framework. We also are in the early days, but we're going to look to capitalise on that virtual family office, the growth of the family office market. We can offer the CIO services and the specialist funds to this sector. There are parts of this that even, just if you're running an IFA, you're running your own AFSL, you can access this. It's just the consideration of how you would do it with your client type and how you would do it in your business. But this for us. And then what that allows us to do is also think about intergenerational wealth. So the most recent family office that we've just given advice to started with the family office needing portfolio advice, and it very quickly cascaded down to the next generation, and then it very quickly cascaded down to the next generation. And what we were able to do using a consistent main investment philosophy process of building portfolios, we were able to tailor the bespoke nature for each layer dependent on the client type, dependent on the generation we're talking to. But the majority of them got access to most of the same investment capability, but in different ways. We have the ability as well also in our business, because of the Findex side, we have a Chinese wall from our perspective, but on the Findex side is they do accounting, audit, tax, they do SMSF admin, they do all sorts of stuff. It's really important that if you're going to be dealing with this space as well, is that you're thinking about who your partners are in this. Who do you know is going to fill this void? Because what you don't want is you want to be the professional advisor. You want to be the source of truth. You don't want to be a part of it. So you want to be able to offer a solution that sees you at the cornerstone of the relationship, providing access. Another thing that is interesting when you're looking at family offices, and again, if you're dealing in the high net worth space, you'll know this, but when you're thinking about IMAs and you're thinking about building portfolios and et cetera for clients, you've got this concept of the investment policy statement. The investment policy statement is exactly what is required for the validator. Doesn't matter if you're giving them retail advice, you're still going to give them an SOA, forget your compliance regime. The investment policy statement will talk directly to your validator. And what the investment policy statement does is it sets a framework of the relationship. It sets clear strategy and objectives. It looks at who's responsible for what. And it makes it very clear what they're responsible for, what you're responsible for. And it ends up being a negotiated point. It's not a point of, here's all my money. We did research years ago on the retail side in my past life with Scandia when I first joined Australia. And the research that we did said that 66% of clients that left that had an advisor in the last 2 years, a new advisor, would leave if they had a different option come across them. And the reason was they didn't know what they got. It just got outsourced and bundled and they had no idea what they were doing. Validators doesn't cut it. So if you're looking to get into that high net worth space, and you think this is the place I want to be. You don't need to be in the virtual family office or ultra high net worth, just high net worth. Think about the validator and think about how you might use something like an IPS. And then you'll do things like this, which is the framework for decision-making governance. I'm just being quick because I'm once again going over time. What we've then done is, as I was talking about, is the capability with Kieran's team, which is about bundling product and making sure that we can look outside these shores and for illiquid assets that are not readily available, that we can add value to our clients at the right price. And this is the Centric Capital side, and it's things like Grosvenor Capital Management is an example. I don't have any time to go through this, but this is an offshore manager. It's a multi-manager of 8 hedge funds. It's not readily available. We've got that relationship. We can offer that uniqueness to our clients and to external clients. But it's what we've done. And then the final is an example of what we've done. But if you want to understand any of those investment opportunities, then Kieran is in the house. But the final piece is the technology, is an example. So there's multiple things that I haven't talked about, but investment side, engagement side, and now the technology. Most I'll try and do this quickly. Most most SMAs will do these 2 layers. So you'll have your balanced or your growth layer, strategic layer, and then you have your asset allocation layer, 2 layers. Problem with that is that does not lend itself to liquidity. So what we did, and what Kieran's, prior to my time and Kieran's team did, was develop the technology to go 4 layers in. So we were then looking at that liquidity. We were looking at how do we give alternate assets and still get the scalability of MDA. And we looked at the technology and said, right, we just need more layers. And then once we got layers, we can then have a sub-layer, which is that layer 3, which can look at active and passive. And then we can even go down into individual mandates. And those mandates and all those layers mean that we can actually isolate any component of it and isolate it from an overall rebalance. But SMA technology can't. So it's just an example of why MDA technology is important as an aspect of dealing with the high net worth market. And it's just one of the examples of what we've done. So they're not necessarily the answers for your business, but hopefully they're just thought leadership of the types of things to be considering when thinking about this market, what you might do, and where it's going to add any value. And sorry, Toby, I went over again. Thank you, everybody. Appreciate that.
Now, questions for Martin. He covered a lot, and in what is, I think, emerging as a critical part of the advice world. As Centric has evolved, Martin, how have clients who've come along the journey? I know there are a lot of well-established clients in Findex and Centric. I mean, how have they responded to Centric and Findex evolving the service?
Yeah, well, if you look at the journey...
Probably close to the microphone.
If you look at the journey from the original days of Centric and then been merged into Findex, the whole business effectively is an MDA business. So advisors don't do a lot of individual portfolio consideration. If there's a client needs an individual portfolio, Kieran and his team generally will run that as an IMA. So there are slight differences, but predominantly clients are more than happy to be in the MDA. The other side to it is, it isn't just an outsourced business efficiency. A lot of time and effort goes into the performance. So all against peers, all the MDAs have to be top quartile. If you're not adding value and being able to demonstrate that I'm going to outsource into this portfolio, and you don't have the returns, and you don't have the cost profile, and you don't have the timeliness, it's not going to work. Advisors, I'll be honest, when advisors join Findex new and they've not come from a managed account compulsory environment, they get a little bit itchy because they want to run portfolios. But clients don't have that issue. Clients want cost-effective, performance-led portfolios. Whether the advisor does it or not actually doesn't necessarily, it doesn't matter. So I think overall it's a culture within the business.
Other questions for Martin? Yeah, Peter. Yeah.
So I don't know how many clients you've got, but if you've got 7 billion under management and it's an MDA-led model, How many models do you have? I imagine it's not just 3 or 4 models. You must have a massive menu, do you, or not?
Yeah, I might get Kieran to.
There's a large amount of models. The base set of models would be about 28. So you're talking about passive, you're talking about active, and a set of SRI models. The reality is, though, we use a number of platforms, which means you have exponential amount of models because they don't necessarily have the same investments on them. So at the end of the day, we're probably tracking about 143 models in total that are being managed, but some have very small amounts of them. But the baseline, SAA, TAA, all of that stays the same. So there's just a substitution on some of those, and then probably about 800 plus or minus IMA accounts. And that obviously, there's a lot of advisor input on that because it's for the client, might be for CGT reasons, it might be that it's a foundation and it's matching liabilities and it needs to pay out. So those are not counted in that, but the core set of models where 90% of the FUA will sit will be 28.
Okay. Just to pick up on Kieran's point, I mean, that is one of the great advantages of the MDA structure, and this is not a discussion about MDAs, but every client relationship actually is contractual and unique. So you're not caught up in this SMA, got to have a PDS, you can have 5, you're a number 3. Look, please join with me in thanking Martin.